SMEs present the most significant untapped potential for growth, employment and economic transformation in South Africa. That's according to Genfin Business Finance CEO Jaco Erasmus. He says this is possible with the right financial support. Genfin boasts that it's able to provide funding to thousands of businesses in approval times rarely experienced in the traditional lending landscape. Jaco Erasmus from Genfin Finance joins me now virtually from Cape Town to tell us a bit more about the product structure that they are seeing success with. Jaco, thank you so much for your time this evening. You know, when we speak about SMEs, mainly we speak about how we know they're so important to the business, but because of red tape, it's been so difficult for SMEs just to get off the ground, let alone to see them thrive. Why did your organization decide that this is where you need to focus, especially if you keep an eye on wanting to make your contribution to really help influence the economy going forward?
Yes, evening. Thank you for having me. Yes, I think, first of all, I think in terms of your intro, obviously the importance of SMEs in the South African context cannot be underestimated. At the moment, SMEs contribute close on 40% to the GDP of the country, and at the same time employ about 60% of the South African workforce. So certainly very important in terms of the economy and also in terms of the recovery and the job appointments that we are looking for, just given the high unemployment rate in the country. But I think to answer your question, I think traditionally SMEs have struggled to access both capital and financing in the traditional manners, mainly from the South African banks. And banks would typically require collateral or assets and do their funding on a secured basis. What we as Genfin have done is really just to look at an SME over a 12-month period, looking at their sort of trading over a 12-month period by sort of looking at their 12-month bank statements, effectively looking exactly what has happened in their business, both from a trading point of view, in terms of who they're dealing with, who their debtors are, do they have any debtor concentration risk in the business, what other sort of debt they have in the business, and effectively we use that information, so effectively a combination of technology and data to then work out what the company or the SME's ability is in terms of affordability. And on that basis, we then make available what we call unsecured funding to SMEs, ranging anything from, I would say, 100,000 up to 5 million.
Sure. Now, I believe in 2022, Genfin Business Finance rebranded and relaunched with a 100% digital online application process, offering SMEs uncomplicated and transparent lending products. And you've just explained to us, you've given up a snapshot of just how your process works. Obviously, it sounds like a lot of data analytics that's taking place there. But, you know, people hear that they hear unsecured, they hear flexible funding, and people say, oh, hang on. Does this sounds a little bit too risky for me. I don't think I want to get involved here. Are we too conservative in how we approach funding for SMEs in the current climate that we find ourselves in?
Yeah, I think it's a valid question, and I think it's also at the same time it's a difficult one to answer. And I think you have to distinguish between, let's say, and call them your startup companies that's been going for, let's say, a year to 3 years. And statistics will tell you that those companies normally have a high probability of failing. So I think when it comes to your real sort of startup companies, it is very tricky and it becomes difficult. And it normally takes, I would say, 3 years and longer for a company to establish, to really find their niche in the market. But I think, yes, so I think if you then start to talk about companies that's slightly more mature, and you also talked about the rebranding of Genfin, I think what we want to focus on and where we feel we can add value is really to focus on your slightly more, let's call it, well-established SMEs that's been going for 3 years and longer, companies that obviously have been through a couple of economic cycles, and we've seen that during the COVID periods. Our credit model remained very robust in terms of that. So I think to answer your question, I think if you are selective and you are obviously using data across multiple sectors, and you apply it on that basis, and you can then offer funding in a sustainable manner to SMEs. Because I think the important thing is not only to give financing to a company, we take the risk and we do it on an unsecured basis, but for us, it's also important to make sure that the SMEs do have the ability to repay us. Because the last thing that we obviously want to do is to further indebt a particular company and for them to struggle to make their obligations in terms of payments to us and to their other creditors. So, yes, I think to answer your question, it is a risky business, and hence probably why banks are sort of shying away from that and prefer to take collateral rather than doing it on an unsecured basis. But I think if you do it in a sustainable manner and you work from sufficient data, I think it's certainly doable. And I think in terms of our business model, we've been going probably for 6-7 years now. And I think what is good for us to see is that we do have a large proportion of customers actually coming back to us that actually do refinance their facilities and that are good payers. So for us, the business model works at this point in time. We see a significant opportunity in the South African market. So yes, yeah.
Yeah. Just one final question before I let you go, Jaco. We are pressed for time. I mean, you say that you can see why, if you look at your sector of the finance industry, you can see why traditional organizations or traditional banks shy away from this kind of lending. But some would say that is what's been holding our economy back. What is your view? Is Genfin out here to disrupt, or are you hoping that others follow suit and help you on this quest?
Yeah, once again, I think it's a good question, and I think you're right in terms of your assessment. I think banks have been struggling up until now to really sort of enter that market. I think there are a couple of new entrants in the market in terms of banks that will probably, I think, get to the same business model over time. But at the same time, it's such a big market. If you look at the defined, what they call SME funding gap, it's anything between 300 and 360 billion at this point in time. So I think it's a vast market. We want to disrupt the market, and we're making good progress in terms of that. But I think the market is big enough for a number of players. As we see it with the general economy, we've got 5-6 large South African banks, and there's a significant market share that they each maintain at this point in time. So yes, I think to answer your question, I think in terms of if we look at the broader economy and to the benefit of South Africa as a whole, I think it's important that we have more players similar to us that come and enter into the market.
Okay, great. I'm going to leave it right there. Thank you so much, Jaco Erasmus, the CEO of Genfin Finance, joining us virtually from Cape Town. We thank him for his time.